All right, welcome back to JYR Trades. I am your host Jesse Garcia, and today is Tuesday, June 16th. And let me say, what an interesting morning it was. Not because of the trades, but because of the evidence that the market showed us before the trade. And one of the things that I've been learning, ladies and gentlemen, is learning to trade with evidence before I go in. Okay, with that said, ladies and gentlemen, welcome back to my channel. Remember that everything that I share on my channel here, everything that I share is for educational purposes. Nothing is financial advice, but I will say this: if you want to learn how to trade like the institutions trade with the institutions, you want to learn to trade auction theory, equilibriums, liquidity, then you're in the right place. Okay, this is not the type of place where you're going to learn to trade with indicators. Okay, at least not with buy and sell indicators. You're actually going to learn how to trade the proper way, looking for the story that the market is trying to give us. Okay, all right, with that said, ladies and gentlemen, it is 9:29 a.m. and something unusual is happening. I'm usually making this video, well, usually I make these videos late after the market has closed, done its business, but I feel that with the evidence that I have in front of me, I think it's important that I do the video now. Okay, I feel like it's not only the correct thing to do right now, but also I feel that that it's going to help you in more ways than not. All right, with that said, let's go ahead and get started. So this morning I took two trades. Okay, now if you have been following me, one of the things that I always ask right before when the market opens is, are we opening inside New York value? Are we opening outside value? How far are we from the previous auction zero? Are we too stretched? Are we, even if we're stretched, is there a possibility that New York is going to ignore that repair? It's going to continue an expansion if we're outside? Or if we are inside value, are we going to be in a true rotational day, or are we expected to expand out of that value? Okay, so this morning I took two trades. I took one long that entered roughly around here. Okay, gave me a little bit of drawdown, but ended up hitting the target here. And then I took another short. Okay, shortly after that, entered somewhere around here and exited somewhere around here. Okay, both were winners, but most importantly is, why did I take the trade? What was the evidence behind it? And that truly is the story behind it. Okay, now I'm going to go ahead and show you guys the process that I've been following. Now, before I go with that, you have to remember that every single day, ladies and gentlemen, the night before, I do my typical markets. Okay, I will look at the market from the day before. Okay, and first things first, I will measure the entire day. So this is the day before, and this blue teal line represents the previous day low. This yellow line represents the previous day mid, and this blue teal line represents the previous day high. So I'll take a fib and I'll basically measure. Okay, I'll take my fib tool and I'll basically measure from top to bottom. Okay, just so that you can see the measurements here. And I will measure that I align my blue teal lines with my 0 and my 1, and my yellow line with my 50. Okay, that's the first thing I do. Second thing I do is I get my fixed range volume profile 2, which is this here, and I'll measure from the entire New York, okay, to New York beginning to end. Okay, and what that'll give me, ladies and gentlemen, it'll give me three things. Okay, just like you know, just if you've been following me, you know that every time we do a fixed range volume profile, it gives us three things: the point of control, that's where the most trading took place, the value area high, okay, and the value area low. And so what I'll do is I'll measure them, and this will give me two specific, again, the measurements here. And what I'll do is I'll mark them up. I'll use a white line to mark up my value area high, and another white line to mark up my value area low. Okay, and which are this and this right here. And then I'll set up a red line for the point of control. Now if you go back over here Excuse me. Oops, I just gave me one there. I did one accidentally there. Let me remove that. All right, and so if you notice here, when New York opened, I do have my markings here, by the way. You can see I have a New York POC, I have a 24-hour POC, a London POC, and an Asia POC. I know it's a little hard to tell right there, but they're there. Okay, now this will give me an understanding as to what the market is doing, what to expect, okay, for the next day. Now I'll also measure from top to bottom the New York, and I'll get the mid. This is my green line, and let me remove some of my indicators here that I normally use when I go live. Okay, so this is my green line, this is New York. So if I take a fib and I were to measure from the top of New York to the bottom, you'll see that this lines up with my 50 here. Okay, so I'll do that, and then I'll take a fixed range volume profile, and I will do specifically a fixed range volume profile from the entire day, from Asia to New York, for that specific trading session. And once again, I will get the 3 levels. Right here I got the value area low, value area high, and then of course the POC. Now for this particular day, the POC for New York and the 24-hour was on the exact same level, and that is why you'll see that over here, okay, I do have New York POC and 24-hour POC letting us know that they were both on the same level here. Alright, okay, so let's go back over here. Now what I'll do here, guys, I started doing this, I started marking my value area highs and lows or the 24-hour, because sometimes price does go to it, especially on rotational days, inside value days, where it may go to the value edge, okay, and it may go a little bit outside, and if that 24-hour value is the outside of the New York, it will actually stop there and then come back. So it gives us a visual of understanding, because for some traders, if it goes outside of the New York value, say the price breaks out of here, they start to automatically thinking, oh, it's breaking out, we're not going to rotate back into value. It's breaking out. Not necessarily, it may be going to the 24-hour, okay, and then coming back down. All right, so I use a gray line here to differentiate between my New York value and my value edge and my 24-hour. Okay, so that's what I do. So here, that's why you see another gray line. All right, so and then I go back over here, somewhere over here, ladies and gentlemen, and I do a 3-day. Now the 3-day, I do it just for context more than anything else, but you can see it right here. And this is what I start doing, ladies and gentlemen. Okay, so what I do here is I measure the 3 days, okay, and of course I'll measure the high and the low, and this is why you see this fib here. All right, this larger fib. So right here we have the 3-day midpoints, and this is the point of control. So the first thing I'll look at is, okay, is the POC leading north or south? In this case, the POC is leading the mid to the south. Okay, we're doing 673 points, so that's letting us know that there's a possibility of unfinished bearish action down below. That's it. Okay, that's not the whole story, but that's what I look at. That's the first thing I look at. Okay, now remember that. Now the next thing I look at is I look at the 24-hour. Okay, the 24-hour, this is my previous day mid. Okay, the previous day, the 24-hour mid basically, and I look at the POC. Now here I'm looking at this POC, which is this one over here. I'll make sure I'm on the right one. Yeah, it's this one here. You're seeing that it's leading the imbalance to the top side. So this one here is actually conflicting with the 3-day, but that's not the whole story that I look at. There are 2 other things that I look at, ladies and gentlemen. I look at the POC and I look at the value area highs. Which side has more room, more potential? And so what I'll do here is I measure the POC and I go to the value area high. You can see the white line here, 33 points. Well, where is my value area low? It is down here, 300 and like say 30 points. So it's about 10 times greater the distance to the south. Yes, the imbalance is leading to the north, but the story when it comes to the geometry of the volume profile is letting us know, first things first, we have more space to the downside. Now the other thing I look at here is I look at the shape, okay? And look at the shape starting from the POC now, because I do see that we have a lot less space to the upside. My general inclination here is that we want to trap to the upside and then move to the downside. Okay, now this is just a bias. Okay, understand that it's not confirmation, it's not 100%, but that's what I'm looking at. Now when I look at this here, understand this here, when I look at this here, we have like a stair step case here of volume nodes. It's letting us know, this is what I'm seeing here, this is what I'm reading. Okay, again, you have to make that decision when you look at this here. And the decision that I kind of was making here is that we're going to have a steady trap to the upside, and eventually it's going to hit, I guess, the wall, and it's going to start steadily coming down. And then eventually we're going to have some kind of speed coming down, and then it's going to come back up, okay, and then start coming back down once again. That's kind of what I'm seeing there. Okay, so then I go to the New York profile here. Once again, New York is here, and let's measure. Remember, this one we measured to the gray one, and I apologize, I think I measured to the white one right now, but I did measure down to over here for the value area low for the 24-hour. So here I'm going to measure once again, same spot as the 24-hour. Here it is. Again, 30 points or so, a little bit more. And down here we are at 133 points. So that's telling us we have more space to the downside. Okay, about 4 times more. And once again, I'm looking at the geometry from the POC, steady trap to the upside, and then a steady move, okay, to the downside. Alright, and then we get some resistance, possibly some pullbacks, and then eventually it comes back down again. That is what I'm looking at. Now this imbalance right here, once again, it is leading it. It is leading, when I look at the New York mid, it is leading it up. But again, we have more space to the downside. So when I saw this last night, sorry about that. When I saw this last night, I said to myself, look, if we have imbalances leading up, okay, the 3-day was telling us there was business, still unfinished business to the downside, but the 24-hour in the New York was giving us imbalances to the upside, but the geometry was telling us that there was more space to the downside. And I'm not talking about a little bit more, a lot more significant to the downside. So this is what I said to myself when I went to bed last night. I said, if I'm correct, then we're going to start to see a transition with Asia, possibly London as well. If London confirms it, that we're going to the downside, in other words, that we have the POC leading the mid to the downside, then that's making the shift, confirming that we're transitioning from an imbalance up. Now we're going to go down, and this is going to confirm this story right here, that we have more geometry to the downside. We should expect a steady trap to the upside, and then the move will come to the downside. That's what I'm That's what I said to myself last night. Now, what did Asia do? First of all, Asia ranged. Wasn't a whole lot, about 110 points here. But when I did the measurements here, all right, this is my Asia PLC here, right here. You can see this, and this is my London mid. I measured it, top to bottom. This is my mid. Did the fixed range volume profile, and you can see right here that we have an imbalance leading to the south. Not a whole lot, 24 points, but it is leading to the south. London starts to move up initially, right? Gets over New York high, comes back to the New York PLC, goes back up, creates a higher high, the highest of the session, and then around 6:15 a.m. this morning, it dropped massively. Now, what this creates, ladies and gentlemen, is this creates the volume profile to have the actual PLC leading the mid. We have London mid, the PLC here, and what does that do? Creates an imbalance to the downside. So now we have London confirming that it wants to go down. Now, this is where the evolution has come from me, myself personally, and this is where I would recommend that you start following. Just because we have these things in place, we have this evidence, we still have to wait for New York to confirm it. And that's really what has been allowing me to have better setups, stronger take profit, but just better trading experience overall. Patience is key. We get paid for patience, ladies and gentlemen. We don't get paid to trade. We get paid to wait. That's the reality. So let's take a look at what happened. Now, when New York opened, this is what I said to myself. Okay? Before New York opened, I thought to myself, okay, if we are expecting a trap to the upside and we are opening inside value, okay, we see our white lines, we're opening inside New York value. Initially, I said to myself, I think we're going to go to the New York value area high. But then something happened. I asked myself, where did New York open? And this is one thing I've discovered lately. When New York opened inside the mids, okay, in other words, you see that right here, this is where New York opened. We have Asia mid, and then we have London mid. It opened inside. So I said, this is what I said two things. One, okay, if the geometry confirms that we're going to have a trap to the upside, it may not be the value area high that dictates the move to the downside. It may be the other mid, which is going to be stacked up with our New York PLC and our 24-hour PLC. And I said it's going to be the London mid. Now the second thing I said to myself is, I said the trap is going to be up here. That doesn't mean it's going to automatically go here. I said New York might create a trap for the trap. That means that New York, as you can see, it opened to the downside, pushed past the specific mid here, and what did this do? It actually probably took out traders that were expecting a move to the downside right away. So price went down, boom, hit the New York mid, and then from there it took off to the upside. Now, once I had post migration here, ladies and gentlemen, post migration happened here. You can see this right here. This is one of my indicators that I built myself. This just basically gives me the fair value price. This is where sellers and buyers agree that this is the fair price. Okay, it migrates every time New York opens. Sometimes it migrates quicker, sometimes it takes a little bit longer. Today it was right around 740. All right, once migration happened, I saw that price rejected auction 0. We had a candle giving me displacement to the upside, and on the second candle after that, or the third candle after, fourth candle after migration, I decided to go in. Now, technically, when it came back down here, it gave me some drawdown, and this would have been the better entry because it was rejecting the cloud. This is another indicator that I purchased, well, not purchased, I created myself, that gives me again a better understanding of the market overall. So once it rejected, started moving back up. And then what did I target, ladies and gentlemen? Notice I did not target this here. I did not target the value area high for New York. I actually targeted right below the mid. Why? Because sometimes price likes to flirt with us right before the target and starts coming back down, right? So I targeted that, hit a take profit. I was good with that for now. And that's the other thing too that I wanted to talk about, is that the evolution over the last 3 weeks has been all about evidence for me. And I knew based on the evidence that if it rejected here, then the move to the downside was starting from here, right? Now, and the move was going to be bigger than this particular move here. Once price came here, did a little bit of ranging here, rejected the New York POC and the London mid from here, and gave me some displacement here, I decided to go in here. And once again, it gave me a little bit of, again, rejection at the cloud. Okay, came back up, rejected here at this POC, which is the London POC here, by the way. And you can see that my EMAs lined up still. They were holding the ground. I had my Remetar bands. This is another one that I have here. You can see this green band here. It wasn't going past it, and I knew at that moment, I said it's holding its ground. We got sellers holding their ground. If price had come up here, I probably would have invalidated my trade, and I would have exited out, or maybe reversed it, targeting here the value area high. But it didn't continue going up. It actually held its ground. And what did I do? I stayed in the trade and I targeted. Initially I had my target at the 62, but I said, you know what, I'm gonna go ahead and target it right between Asia low and my value area high. I'm sorry, low. And what did price do? Started coming through. Okay, rejection at prior action 0, came down straight into this area. Not only did it come straight through this area, but as you can see, remember what I said earlier, the geometry from the 24 hours said that there was a lot more room to the downside, a lot more. But even when I say there's a lot more room to the downside, there's no guarantee on that that's exactly what's going to happen or how much room it's going to be. Okay, but it did give us an indication. And what did price do? Came down to the -1, a little bit past it, about -115. Came back up to the value area low, rejected, and the move started even going down more. And it became in phases. And right now, ladies and gentlemen, as you can see, it came down all the way down to the previous day mid. Now, the reason why I do feel that it was going to hit the -2 today was because we had a very small overnight range last night. When I open up my inside value indicator, last night we only had a range of about 213 points. That's it. And that's fairly small. For maybe sometimes, some days it can be average on that. But lately we've been seeing some volatility overnight that allows Asia and London to create some bigger numbers, at least 300 points or so or more. But yesterday it wasn't extremely small, but it wasn't extremely large either. Okay, so I felt like it was gonna hit the -2. However, there's no guarantee on that, and I'm trying to become disciplined. First of all, not being greedy. And lately this level of 62 has been working well. You know, some days when it's overly stretched, this is all it might get here on the fib. Okay, by the way, if you're wondering how I get the fib, okay, Basically, all I do is I take this number, which is the measurement of this and this, my overnight range, Asia and London, the two highs. So like you notice it says 213 here. I will go ahead and I do a measurement here for you guys here, and you can see there it's about 213 there. Okay, and so I'll get that and I'll divide it by 2, which is about 106.5 on today's, and that's what that is. I'll measure a fib that'll give me 106.5 points. And so once I put the fib here, after migration, I put it on the 0 here. Okay. Alright, so with that said, guys, this is all I have for today. The trades have become more evidence-based, confirmation-based. The analysis overnight, the analysis in the morning. But even with that said, you need to understand that New York still has to confirm your thesis. Because before New York opens, all I have is a thesis, that's it. But even when it opens, you have to wait for behavior to confirm your thesis. I mean, for all we know is today, for example, say we have a thesis, it could have gone past this here, hit this, and then maybe come back down here and then take off to the upside. That's why we have a thesis. Behavior will confirm. Okay, and once you have a thesis with evidence and it's confirming, the trade becomes easier to execute. Alright guys, with that said, this is all I have for you all. Remember, everything that I post here is for educational purposes. If you enjoyed this content today, if you learned something, please hit that subscribe button. Please feel free to comment and ask questions. I'll try to answer as best as I can. With that said, till next time.